What is happening, traders? Today, we're going to be getting into ticker symbol GME, baby. And what is painting the picture of possibly the mother of all bear traps. And let me tell you why. There's two scenarios on GME. Of course, one of them's bullish, one of them's bearish. But two scenarios in the micro as well. You can see that you are trading within this bear channel that you broke out of and are retesting now. And you could see that as a possible breakout and a retest. That's how I see it personally. But there is another way to see this as just a good old-fashioned bullish triangle here. Trading with horizontal resistance to the north side and a vertical or a ascending support on the downside. And so the profit target for this technical bullish triangle would be somewhere in the middle of this gap at $27. What you want to see GameStop do here is you want to see GameStop kind of fake out this death cross on the daily. And a death cross on the daily is a very, very big thing. They traditionally have played out on GameStop, but you also have not been in this scenario ever before. We are trading within this bullish pennant and you get a death cross because the chop is so vertical on this chart. I mean, this breakout from 20 to 35 is such an extreme move that it threw off the indicators. 70% move, well, in a bullish pennant, mind you, which traditionally is just meant to be chop price action. The last time you got a death cross on the daily was back here in August of 2022, and the move that followed is absolutely disgusting. Now, what GameStop did here, she went down 70%. That is so disgusting. What GameStop did here was it did actually death cross trade in a bear channel, and then you retested it. And I assume you had some kind of gap that you filled. Maybe. You did. That's terrifying to me. But you weren't in a bull pennant here. You were actually in a falling wedge. And you did pretty much exactly what you're looking to do right now. So this is what I would watch for. Death cross here, right? You have a gap that you have yet to fill north side at $30 and then $28. I would expect a strong move off of this. And if you wick down and you close beneath the gap, for me, exiting the position. Very, very tight stop losses as soon as you fill the gap. Because once you're past this trend line, guys, you should see a decently sized move. I would go as far as squeeze territory, because the price target off of this is ridiculous. The price target off of this is northward of $100. Now keep in mind I'm on the logarithmic scale chart. If I go to linear, I know people always say this. It's still upwards of like $50, which is stupid. Absolutely nasty. Ha! It takes you right to the gap, Phil. That was improv. Can't make that up. $74 price target. This was the only gap on GME's price chart. Before this, you literally had no other gaps, and GameStop is notorious for vertical up or down movements to fill gaps. I'll give you an example, and that was the death cross. On that death cross, you were doing nothing. I'm sure the Bollinger Bands were tight. They were. I'm sure the Bollinger Bands were tight, and they were. And you move, how much is that? You move 42% in a couple of days to fill that gap, and then you dump. But the Bollinger Bands on GME on the daily is something that I don't want to be neglected, because if you look into the chart, every time you've been from the top band to the lower band, a range within $2, you've moved. You've moved pretty dramatically here. So I'll show you guys. within $2 right here. $2, you saw a 40% move. Let's go to the next example. Prices are within a $2 range from the top band to the lower band. You made a 70% move. Oh, I have to zoom out for this one. This is a stupid move. Prices within a $2 band, and my chart can't even keep up, but you made a 500% move. And there's more examples in this chart, but I just want to focus on what's relevant on the macro pattern that we have. This bull channel, guys, every time you've been within $2, top to bottom band in the daily, you've made a ridiculous move. Now, where are you right now? You're within $2, within the top to the lower band, and these just absolutely came all the way down, and now they're constricted. So price action is looking to get volatile once again on GameStop. And with these gaps northwards, if you do fill the $28 gap and you do fill the $30 gap and you close above this wedge, maybe you come down to test it. I'd be willing to hold through that. But if you test it and you bounce, guys, you are going to fill that freaking $70 gap. And that would be insane. That would be absolutely asinine to fill that $70 gap, because from here, current price action at $23, that is a 210% move. That's insane. That's amazing, because what that'll do is that'll take the entire meme basket up with it. And it's due. GameStop is due for that move. My only question is, what would be the catalyst? You have earnings in early September. So maybe you do some kind of like breakout fill and then a higher high and then go. Could definitely see that happening on GameStop, guys. But regardless, what you want to see is a break from this absolutely hackish range and a fake out of the daily death cross. Because if this plays out, you're going to go, unfortunately, lower. Either a double bottom at 21, or you'll go and break into the teens, guys. And you do not want that if you are bullish on GameStop. That is the worst case scenario. You need to hold this formation, because this formation will take you higher. And that's exciting. That gets me absolutely jacked. That gets me so excited. So that's my TA on GameStop. I wanted to go through one thing here, and this was a post off of Twitter that I made, reposting someone's Twitter. Let me jump into my Twitter. Was this. I put AMC, this DD by AI is actually insane. We'll see what happens, because earnings, guys, is in 9 days for AMC. But if this is true and AMC actually reports a profitable Q2 earnings, after how bad the previous 2 quarters were, you could see with the setup that you're in on the monthly Bollinger Bands, you could see this thing squeeze. So double bottom, squeeze to this gap fill at $19 to $13 is where you'd look to see resistance. And then, of course, the previous all-time high or low, previous all-time low at $10. That is not off the table, guys. From $3 to $10, it's 3x. That's amazing gains. And let's go into this chart a little bit more. Alrighty, so I was curious. This was my own finding. This is the post that I shout out to Good Guy Gone Bad. AMC is positioned to report profitability in its Q2 earnings next week. If this pans out, AMC will annihilate naked short sellers, yada, yada, yada. And this was him asking either ChatGPT or Grok. I'm not sure which one, but AMC, click on it. Is AMC going to be profitable in next year quarterly report? Why or why not? And so this is the report that Grok or ChatGPT gave, going over a couple of the different fundamental things that are coming together for AMC. And you can see that throughout this entire explanation, they are cutting costs and they're expanding on top line sales. Now, top line sales, they've had the opportunity to pair with Eminem recently. I know that's going to be huge. Kind of similar to the Taylor Swift deal that they had that brought almost $1 billion in revenue. Additionally, they've done things with their candy and their popcorn on retail to bring higher margins and then diversifying income with their investments and all that stuff. So the biggest thing is lower interest burden and lean operating model, especially with visitation and top line sales trending down. You have to scale back on your business. Otherwise, you're going to see AMC's quarterly earnings continue to come back negative, and you don't want that. But the biggest thing that they put in the final take was all signs point to AMC's first clean profit in years, likely in range of 10 cents to 18 cents EPS, earning per share, as long as they cross the 2 billion revenue threshold and manage interest expenses below. That's huge, guys. That is massive. So if you do it yourself, I did it myself just because I want to see what Grok says. And I see critical analysis, bullish case, AMC outperformance relatively to the industry, strong revenue per patron, and debt reduction effort suggest a path towards profitability. The significant box office rebound in April and May 2025, combined with the history of beating EPS estimates, supports the possibility of a profitable EPS or a smaller than expected loss. Analyst optimism and positive earnings per share further bolster the case. In the bearish case, they just talk about, regardless, whether it be the strikes that hit AMC or the economic conditions, a smaller EPS is what you want to see. And this isn't even bearish. I mean, comparatively to the last couple earnings per share, AMC's goal is to continue to cut costs and expand the top line. And if they can continue to do this, it is only a matter of a couple quarters as you have Wicked 2 in November. You have what is that called? Zoolander? I think it's Zoolander 2. No, it can't be Zoolander 2. That's funny. What is that movie? Zootopia. I said Zoolander. That's hilarious. Zootopia 2 coming back in November. And those are two very, very big... there we go. Found it. Those are two very, very big movies, like blockbusters, coming back in November. So if you can continuously stair-step into that, and then that's your boom, that's your grand finale, you're going to see AMC do something pretty stupid here, considering the fact that on the monthly, these Bollinger Bands are tight. Now, on the daily and the weekly, they're beginning to expand. And that's no surprise because you've been making higher highs and higher lows here. And so you want to see AMC break above $4. That's been my channel, Trap Trades. That's been my whole preface is if you break $4, guys, you're going to look good on the micro and the macro chart. And that combined with fundamental improvements, you're going to see AMC doing something it hasn't done in a very, very long time. Like you could actually see AMC make this double bottom pattern and V-shape up to $13, $19, $43 is the other gap. And this gap is so big, it's actually visible. Like, look at that gap. That's insane. $43 gap. But it all is going to start with this earnings in 9 days. So we have to wait and see. That's the kind of game we're in right now. Got to wait and see. But I am bullish on the recovery play of AMC. It has been sold short so long, and it is coiled so far that taking shares at this range isn't that bad if you hold a stop loss below the all-time low, because you are risking 20% loss, maybe 15% loss, depending on where you put your stop loss, for a potential. Look at the freaking Bollinger Bands get me so jacked, man. So tight. Where you see something so stupid. Taking risk here. 475%. Where's the $19 one? 13 is 300, 500. And then at 43, it is a 1,200% trade. I cannot bang the table enough on how good this looks, guys. So we have to wait and see. That's my TA on GameStop and AMC. Thank you guys for chugging along. I'm at 45 subscribers. So please, please, please get me to 50 and we'll continue this train. We're going to continue blowing up the AMC community because someone's got to. Everyone's abandoned y'all when you need them most, honestly. This is when things are going to begin to get crazy. Coming to the end of this wedge. And it ends in November. How funny. So even if you did trade sideways, guys, big things coming for AMC and GameStop. I don't think you're going to see it go that far, though. The best is yet to come. Thank you for watching, guys. It's been Trap Trades. Get outside, touch grass, and God bless, guys. Peace.